Hello everyone. Today I am going to discuss about an important topic in the subject of financial management. What is financial management? What is the nature, scope, objectives and functions of financial management? Basically, the financial management is that managerial activity which is concerning with planning, organizing, rising and optimum utilization of financial resources. What could be the main objective of financial management is to maximize the value of the firm, thereby maximizing the wealth of the owners or shareholders of the company. Right. Before I go further, first I would like to tell you what exactly the financial management refers and what it emphasizes, what it concerning with. Right. The financial management is concerning with the acquisition of funds and efficient uses of funds. Right. How to acquire the funds, how to procure the funds, and how we have to utilize the efficient use of financial resources by the company. The exactly financial management refers to the how to procure the funds and how to utilize the funds in a business. Then, having said that, let me also go for the planning and controlling of the firm's financial resources. Here, the planning, what to do, how to do, where to do, why to do about financial resources. And controlling, what do you mean by the controlling? Here, the controlling is nothing but what is the standards, what we are getting actuals, compare the standards and actuals of the financial resources. Then we can identify the deviation and make corrective action. So, the planning and controlling of firm's financial resources is a second major salient feature of financial management. The other thing I would like to tell you here is the financial management is normally used as the terms managerial finance, corporate finance, business finance. They are using interchangeably. Most of the financial managers prefer either financial management or managerial finance. Having said that, let me go for one by one about the nature or scope of the financial management. First and foremost thing is what as I mentioned earlier, estimating the financial requirements. What is the needed? What we needed for purchasing current assets? What we needed for purchasing fixed assets like land and building plant and machinery, all these things, furniture. Right. So, how much capital is needed for purchasing fixed assets? How much capital is needed for purchasing current assets? That is the major. The first one is estimating financial requirements. Right. The short term capital is known as working capital. The long term financial requirement for that business is a fixed capital. Right. So the capital which is mentioning for which is used for the fixed assets and the capital which is used for the purchasing current assets. The first and foremost thing, what exactly you need, that long term capital or short term capital. What is that you need long term financial resources and what you need for short term financial resources. Having said that, then after estimating the financial requirement, you should decide what is the capital structure. What do you mean by this? The combination of debt and equity is known as the capital structure. Right. So, what could be the proportion of different securities for rising funds? Right. What you have to take it as a fixed assets through long term debts or short term debts, or whether long term capital or short term capital. That is the that deciding the capital structure is the major nature of financial management is what type of securities we should raise so that we can get maximum value of the firm. Having said that, let me also go for selecting source of finance, where you have to take whether you can take from the financial institutions or commercial banks or public deposits or any other thing, either share capital or debentures. You should take a source of finance as an appropriate way. On the other hand, if any long term finance, if you wanted to take, you can choose share capital and debentures. If it is short term, you can approach financial institutions, commercial banks, or public deposits. Right. Then, after said that, then we have to identify the selecting the pattern of investment. Right. Again, I told you how much investment you needed for the fixed assets, how much you needed for the utilize the investment is needed for the purchasing current assets. If you go for the long-term investment decisions like capital budgeting or short-term investment decisions like working capital management, that is a selecting pattern of investment. Then proper cash management is also another nature of the financial management. If you keep more cash in our business, what will happen? It will become an idle cash, unutilized cash. It will also problematic for the firm. If you don't keep any cash in your company or business, what will happen? It will be major obstacle for the productivity of any company. Then that is also proper cash management, right? Then implementing financial controls like budgetary control, break even analysis, cost control, ratio analysis, we have to improve proper use of surplus. Means whenever you have any surplus amount, you can utilize it for the expansion or diversification plan so that it will protect the interest of the shareholders. Then proper utilization of funds, you have to utilize properly. Efficient and optimal utilization of funds is always needed, maximizing the wealth of the firm or firm's value. Then after stating the nature and scope of the financial management, now straight away I will move on to the objectives of the financial management. What could be the main objective of the financial management? Right. Basically, the any business or any company, what they need is in each and every business is created for certain goals or objectives to be achieved during its lifetime. The objects may be given by in vision, mission, or value statements of the firm. In the financial management, there are two important and widely discussed the criterion, decision criterion to judge and decide different alternatives in investment, financing, dividend decisions. The measure and the objectives can be achieved by two things. That is, one is profit maximization. Second one is a wealth maximization. Right. First, I will go for the what is the profit maximization. Right. The profit maximization means maximizing the rupee income of a firm. For every business activity or every economic activity, profit earning is the main objective. No business can sustain without earning profit. Profitability maximization should be used as a basic criteria for finance functions decisions because of there are so many things we need to consider the profit. See, because the profit is regarded as a indicator of economic efficiency of the firm. The first thing. The second thing, right? The profitability is a barometer for measuring efficiency or economic prosperity of a business enterprise. The main objective of any organization is the earning profit. The other thing, the other reason for arguments for profit maximization is it ensures efficient allocation of the resources. The main source of the profit is the main source of finance for the growth of the business, and it is essential for all fulfilling social goals. If you wanted to achieve any goal, profitability is the main criteria, main factor, and significant role will be played in any organization is profitability. A business will sustain, survive under unfavorable situation only if you have some earnings. So, because of this, the profit maximization is a one of the objectives of the financial management. Despite all these things, there is some criticism about the profit maximization in the financial management. What is that criticism? The criticism first, it is a vague in nature. Profit maximization we told, but it is the maximization of objective is unclear. He did not mention whether it is a short term or long term, or profit before tax or profit after tax, or it is a total profit or EPS, earnings per share. Right. Profit is a rate of return on capital or assets or shareholders or equity. So the first objective is it is not having a clear cut thing. There are so much unclarity about profit maximization. The first criticism of the profit maximization. The second one is it ignores the timing of the return, the timing of benefits. The important technical objection with the profit maximization is the ignores timing of the benefits. It doesn't consider the time value of money and treats all benefits equally valuable irrespective of the period of their receipts. That today 1 rupee is different from tomorrow's 1 rupee. Or today 1 rupee is different from after 1 year it is 1 rupee. So it avoids the fact that cash received today is more important than the same amount of cash received after some years. So it ignores the timing value of money. One more thing it also ignored is it ignores risk. Right. So it is the degree of certainty, the degree of risk has been ignored by these objectives. It is the benefit may process different degree of certainty. The two firms may have similar same total expected earnings, but if the earnings of one firm may fluctuate when compared to the other. So the profit maximization ignores the timing of the factor. Not only that, it also ignores the risk factor. Right? It also ignores the quality of benefit when we reached. The other one, the criticism of profit maximization is also having the effect of dividend policy on the market price of share is also not considered, and it also fails to take consideration of the interest of the government, always taking into consideration of the profit maximization irrespective of the interest of the government, workers and other persons in the company. And one more thing, the firm's goals cannot maximize profit but to attain certain level of rate of profit, holding certain shares of the market or certain level of sales only. It cannot maximize the profit after certain extent. So these are the different criticisms are having in profit maximization. Now, after having stated this, let me move on to the main objective is wealth maximization. Wealth maximization is a widely accepted operating criteria for financial management decisions. All decisions are taken to maximize the shareholders' wealth. The objective is also known as value maximization or net worth maximization. What do you mean by net worth? Total assets minus business liabilities, you are going to get net worth. Right. The wealth maximization means maximization of net present value of course of action. Right. See, it is considered all timing benefit, time value of the money consider it considers, and it also considers risk factor, and it also considers certainty. So, what exactly the stockholders' current wealth in a firm? The number of shares owned. into current stock price per share is known as the wealth of the firm for the particular stockholders. Right. The wealth maximization criteria for every financial, besides profit, the type of sources used for raising funds, the cost of funds, the condition of money market, or some factors that influence the market value of the share. Having said that, what are the main implications for the wealth maximization? Right? The short terms are primarily interested, they are showing interest in this because the liquidity position will be getting higher. The long term lenders also get fixed rate of interest from their earnings. They are also having the priority in this for return of their funds. The employees may also acquire share of companies well through bargaining. Management is also elected body of the shareholders. They're also feeling so happy. The efficient allocation of productive resources will be essential for raising the wealth of the company. The economic interest society is also protected if you go for the wealth maximization. Right. Even then, there are some arguments against wealth maximization because it may not be socially desirable. And the shareholders' wealth only, they are not talking about the interest of the customers, creditors, suppliers, and other community. And the financial, sometimes it is a controversy whether the objective is only for shareholders or debenture holders or for preference shareholders. It is a some unclear is also there. The objective is not descriptive of what the firms actually to do maximize the wealth also. Right. Before going other thing, just I would like to the points to remember is profit maximization. It is easy to calculate the advantages, easy to determine the link between financial and profits. It emphasizes the short term, but it ignores the risk factor, ignores the timing, require immediate resources. Whereas stockholders wealth maximization is it considers risk, it also considers uncertainty, it also considers stockholders return. It is meant for long term purpose. Again, it offers no clear decision, financial decision and stock price that can also lead to the management anxiety and frustration. So these are the disadvantages about the stockholders wealth maximization. Despite all these things, wealth maximization is considered as a superior object to criteria for financial because it is an exact one, precise and clear. It measures the benefits in terms of cash flows. Also, it also incorporates the time value of the money, concept of compare cost and benefits for the future course of action, and it also considers the risk factor and uncertainty factor attached to the future benefits. It can be applied to all decision areas of finance big so because of keeping all those things in a view, wealth maximization is considered as a superior objective when compared to the profit maximization. Then, the last phase of the financial management today I am going to discuss, that is functions of financial management. These are the very important factors of the financial management. There are three functions, means investment decisions, financing decisions, and dividend decisions. Right. Investment decisions. First, what do you mean by the investment decisions? Right. Investment decisions relate to the selection of various assets in a firm that should commit its funds to way to maximize the returns on their investments and overall goal of the wealth maximization. Investment decision decides the volume funds of an enterprise should commit various assets of the firm. Again, I'm going to tell you investment requires long term investment and short term investment. The long term investment decision is known as a capital budgeting decision. The short term investment decision is known as a working capital management decisions. Right. The capital budgeting decisions involve commitment of large amount of funds. So, if any wrong decisions will affect the future profitability of the firm. So, these decisions give direction to the firm and also determines its future earning potentiality. These are irreversible decisions. Once the decision taken and implemented cannot be generally reversed. The cost benefit of these decisions are measured in terms of cash outflows as well as inflows. So, coming back to the working capital management decisions, working capital management refers to the management of investment short term assets. The short term investment decision is the working capital management decisions. The short term assets means the current assets of the firm. Long term investment decisions is fixed assets or long term assets of the firm. So, investment decisions have to take very clearly. So, the capital budgeting process and working capital management decisions are should be properly taken decision by the functions of the financial management. Having said that, let me move on to the financing decisions. In this, three factors should be considered. First is cost of capital. What do you mean by the cost of capital? The financing decision nothing but it is concerned with the procurement of the required funds at the required time with minimum possible cost of capital. So we have to get the funds, we have to procure the funds, but you have to use the minimum cost of capital. What do you mean by the minimum cost of capital? Means minimum required rate of return by the investor from his investment. So everyone expects minimum required rate of return, because if you go for the fixed deposit, at least you are going to get 8% to 9%. If you invest in the company, what they will expect? Minimum expected rate of return, right? So minimum they are going to expect 8 to 9% and more than that sometimes, right? So the first one is a cost of capital, then capital structure decision, the mix of debt and equity, right? Then, so, and the leverages, operating leverage and financial leverage, that I'm going to discuss in further chapters. What exactly the meaning of operating leverage, how much fixed cost, and financial leverage, how much interest we need to pay, right? So, having said that, let me also move on to the dividend decision. So, dividend policy, retained earnings, these two things we need to keep into the consideration after getting the profits. Right. So, you have to decide optimum dividend payout ratio, the proportion of dividend payout where the value of the fund should be maximum. And also, you should decide the portion of profit should be retained in the business to meet financing assets. So, how much amount we need to distribute to the dividend to the shareholders, how much we retain profits for the future investment purpose. That is also one more decision in the financial management. In nutshell, these are the different things we need to follow. The points you have to remember is the main the financial management nature, selecting the fund, selecting the pattern of investment, proper utilization of funds, ultimately maximizing of the value of the firm. These are the silent features. The coming to the objectives, profit maximization, wealth maximization. There are some criticism in the profit maximization. It's a vague in nature. It does not consider timing and risk. But whereas wealth maximization considers all the factors, so wealth maximization is a superior objective for the financial management objective. Then coming back to the functions, investment, long term and short term, financing, cost of capital and capital structure leverages, and dividend decisions, dividend policy, and retained earnings. Thank you so much for watching and for staying with me, and thank you for your support and thank you for your encouragement. Please like, share, comment, and subscribe for more updates. Thank you so much.